The Auditor-General provides assurance to Parliament on the accountability and performance of the Victorian public sector. The Auditor-General conducts financial audits and performance audits and reports on the results of these audits to Parliament. On the 28th of November 2013, the Auditor-General tabled his Financial Audit Report, Public Hospitals, Results of the 2012-13 Audits. The report covers the results of the audit of the 87 public hospitals in Victoria and their associated entities for the 2012-13 financial year. It includes a review of their financial results, financial sustainability, and aspects of their internal control framework. There are a total of 112 entities covered in this report, comprising the 87 public hospitals and their 25 controlled entities. Unqualified opinions were issued for all of these entities. Timelines for completion of the full financial reporting process were similar to 2011-12, with the average time for finalising the financial reports being just over 9 weeks, compared to the statutory deadline of 12 weeks. There was also a slight improvement in the quality of the financial reports produced. The financial result for the sector shows that the combined operating result for all hospitals improved during the year, from a deficit of $43 million last year to an overall deficit of $4 million this year. The main reason for this was continued cost containment measures taken by all hospitals and a slight increase in government funding. Total revenue for the sector grew by 3% this year to $12 billion. Total assets and liabilities also increased from the prior year. Assets grew by $300 million and liabilities grew by $200 million. The main reason for this growth was due to the progression of some large-scale capital projects at a number of hospitals, mainly in the metropolitan and regional areas. One of the larger projects which contributed to this increase was the Victorian Comprehensive Cancer Centre, which is currently under construction in Parkville. This project progressed significantly during the year and is still on track for completion by February 2016. In relation to the financial sustainability of the sector, we conducted our assessment of the sector's sustainability by breaking the sector into 3 broad regional areas: metropolitan, regional and rural hospitals. We assessed their sustainability with reference to 5 key indicators and assessed the financial sustainability risk for the sector to be a medium risk this year. This is consistent with the findings from the prior year. The main reason for this assessment is that there were a number of hospitals that were again generating insufficient cash to continue to fund their operations. 66% of hospitals, or 57 out of the 87 in total, had cash holdings which were equivalent to less than 30 days operating cash outflows. However, we noted that there was a slight decrease in the number of hospitals that required a letter of support from the Department of Health this year, with 28 requiring this letter as opposed to the 31 last year. The report also covers the effectiveness of the internal control environment at public hospitals, specifically as it relates to the completion of the financial report. Internal control is how an entity assures that its financial reporting and governance practices are reliable. We found that overall, internal controls were generally adequate for the preparation of the financial report. However, there were still some opportunities identified to strengthen the internal controls framework. There were 2 common findings, which we had noted in the prior year, which relate to deficiencies in the preparation and review of key account reconciliations, which is consistent with last year's findings, and master file standing data changes, specifically over payroll and accounts payable data, were not being independently reviewed, which is also consistent with last year's findings. Each year we conduct a more in-depth review of specific areas of the internal control framework. This year we chose to look at the effectiveness of public hospitals' risk management frameworks and controls related to the generation of private patient revenue. Firstly, with regards to risk management, we found that all public hospitals had a risk management framework in place. The content and structure of the frameworks were generally adequate. However, we still noted some opportunities for improvement, mainly with regards to review and reporting on risks. Specifically, 21% of hospitals did not have a requirement for their risk management policy to be reviewed annually, and 17 hospitals did not report critical or extreme risks to their board quarterly, in line with better practice. Our next key focus area was on the controls surrounding the collection of private patient revenue. 82 of the 87 hospitals in Victoria generate this type of income, and the total amount of private patient revenue for these hospitals amounted to $719 million. We chose to look at this area because public hospitals are under increasing pressure to fund more of their operations from sources other than government funding, and this is one area which is an increasing source of revenue. We found that generally procedures were adequate. However, we did conclude that there was further opportunity to improve the use of the internal audit function to review private patient revenue, as we found that 55% of the hospitals hadn't conducted an internal audit over private patient revenue in the last 3 years. The report made 5 recommendations overall. These recommendations are mainly centred around the control frameworks which are necessary for the production of the financial report. All recommendations were accepted. All our reports are available on our website. If you have any questions about this or other reports, or if you have anything else you would like to discuss with us, including ideas for future audit topics, please call us on 03 8601 7000 or contact us via our website.